in China for investing and bringing those that choose to be there to invest in China. So it's just a different, where the money's coming from is just different.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Counting it down to the opening bout, the calendar looks like this. Today we're here from the Fed Speak from Bostic, Collins and Jefferson. Wednesday we'll get Fed minutes. Thursday CPI plus another round of jobless claims and Delta earnings. And on Friday PPI and new Mitch sentiment and big bank earnings kicking off with Wells Fargo and JP Morgan. Coming up in about 30 minutes, the JP Morgan boss, Jamie Dimon, sitting down with Lisa. Lisa joins us right now for a preview. Morning, Bramo.
Hey, good morning, John. I'm here in London, which occasionally is sunny and occasionally is pouring. I never know which. I have to say, you were just talking with Mohamed earlier in the show, and he was saying that this is a market that lacks anchors. And there is no one better to speak to than the chief of the world's biggest bank to understand what are his anchors. How is his risk evaluation at a time that is highly uncertain, both from an economic perspective, from a tech perspective. This is a tech conference with a number of tech startups that are looking to potentially IPO. Are they still interested? And then, of course, the geopolitical backdrop with politics very much front and center. We're going to address all of that here as I sit at the bar at the Nova Hotel near Marble Arch.
No drinking. Lisa, thank you. Looking forward to it. 9:30 Eastern Time, must-watch TV. Lisa's interview on Bloomberg at 9:30 Eastern Time with the JP Morgan boss, Jamie Dimon. Coming up tomorrow on this program, we'll catch up with Andrew Sheets of Morgan Stanley, Hugh Van Steenis of Oliver Wyman, Cameron Dawson of New Edge, and Amanda Lynham of BlackRock. All of that and a whole lot more, and of course some highlights from Lisa's conversation a little bit later this morning. Equity futures on the S&P 500 bouncing back just about positive by 1/3% on the S&P 500, and the 10-year, we add some weight to that yield, up another basis point, 4.04%. From New York, thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
To succeed in Wall Street, what skills do you need? You need to be somebody who claws people on the back, people that you have to be tough, you have to be fighting people all the time. What are the skills that really take to succeed in Wall Street?
Great question. Of course, you have to work hard. So I can tell you what I found for me, and it's probably counterintuitive. I had to stick out, which is interesting because I made the decision earlier. Being really the only woman, I already stuck out, and I thought I might as well double down on that. I can't hide. So how did I do that? It was by being a contrarian. And I refused as a research analyst to ever publish research reports that said me too. That said, oh, IBM reported earnings. They came in 2 cents ahead. One of the pennies was currency, the other penny was lower G&A, blah, blah. Forget it. Big calls on big stocks. My very first piece of research I published was very negative at a time nobody did it. I stood the heck out. And when I was right, that elevated me. And David, I've done that as a research analyst but I did it in business as well. Here's a business strategy. If everything's fine, just keep your head down and execute. Every once in a while, you have a big insight, and you can build an entire business, in fact, an entire industry around it.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
All right, is volatility really back for October? 30 minutes until the start of trading. I'm Matt Miller.
And I'm Katie Greifeld. Sonali Basak on assignment. Bloomberg open interest starts right now. I go over.
Coming up, Wall Street is set to open stronger as the China bull run loses steam after a week-long holiday. Principles for the economy and investing. Billionaire Ray Dalio of Bridgewater speaks to Sonali Basak, our very own, live from the Greenwich Economic Forum. Plus, an exclusive conversation with Jamie Dimon, the JP Morgan CEO, talks global markets, tech investments, and the election. First off, though, let's take a look at what's going on in terms of markets. We had a down day yesterday, closing off almost 1 full percent. Now we see futures higher, even though China is lower after, as I said, a week's holiday. So the S&P 500 futures right now about 0.4%. NASDAQ futures up just about the same, and the 10-year yield holding pretty steady over 4%, Katie.
All right, some stocks to keep an eye on, of course, before the bell. Hindenburg strikes again. Roblox falling after Hindenburg said it's shorting the video game stock. We're going to continue to keep an eye on that one and bring you more, but Roblox shares currently lower by almost 10%. Pre-market. You go down the list, we have some good news, and that is Supermicro shares surging for what would be a second day after the company said it recently deployed over 100,000 GPUs in 1 quarter. Meanwhile, Honeywell will spin off its advanced materials division. The move is supposed to create greater financial flexibility for deal making and spin-offs very high.
'99 and 2000,
certainly would.
a little bit higher, but for the rest of history, a little bit higher, but for the rest of history, right? I mean, this is a very high valuation.
It is very high, but I love stats like these because they truly are like an ink blot test. I mean, you can fit it to any narrative. If you're bearish, you can say, for sure, that looks very expensive. I don't want to touch it. If you're bullish, you would point to 1999. You would point to the early 2000s and say, well, there's more room to run here.
Yeah, absolutely. We're going to talk about that today with our first guest. I want to point out, though, that right now in Greenwich, Connecticut, the Greenwich Economic Forum is underway. Our own Sonali Basak is there. She's speaking, as I said at the top of the show, with Ray Dalio, Bridgewater Associates founder and CIO, mentor. We'll bring you more of that conversation in just a few minutes, but you can also watch it if you've got a Bloomberg terminal on your desk. Just type Live Go on the terminal. Let's bring in, though, Emily Bowersock-Hill. She is CEO and founding partner of Bowersock Capital Partners. And Emily, Katie and I just talking about these valuations. If you just look at the plain vanilla PE, we're at 26 right now. And yes, we've been in the 30s, right, historically, but it's still much higher than the 10-year average. Doesn't it feel a little bit stretched?
I do think valuations are stretched, especially in the mega cap growth and technology sectors. But as you just pointed out, we're at PE levels last seen in November of 2021, which was the height of the last bull market. But we're not even approaching the PE levels that we saw in 1999, 2000. So we haven't seen prices decouple from fundamentals. And I would say the other thing that we need to keep in mind is that those high PE ratios are driven in part, or in large part, by a very concentrated group of stocks. So there is room for this rally to broaden out across sectors, and there are parts of the S&P 500, if we're using that index, that don't have those PE ratios. So I actually think that that is potentially a tailwind. Now, I do think we're going to experience some volatility in here in October, and especially in reaction to the election if we don't have a decisive outcome. So I'm not thinking that we're going to, that these PE ratios are going to continue to climb unabated. But I think they're not high enough to derail what is fundamentally a bull market.
All right, so if you see us going higher, Emily, what drives us there? Is it just, earnings season being strong again? Is it the presidential election, maybe the outcome, or the fact that, maybe we get it behind us without a fight? Where do you see the impetus for another leg higher?
Good question. I actually don't think that it's going to be earnings season that's going to drive the bull market higher, because I think expectations are modest, and I think we'll see some modest beats. But in general, I don't think that's going to be the catalyst. I think the catalyst is going to be some kind of decisive outcome for the election, which we may not have. I mean, historically, the fourth quarter in an election year is a strong quarter, and we're set up for that because the third quarter, which is historically the weakest quarter of the year, actually surprised everyone by coming in relatively positive in most asset classes. So I think we're set up for a good end of the quarter. I think the jobs markets helped. The fact that we're in a rate cutting cycle helped. That being said, there's shades, at least geopolitically speaking, there's shades of 1939 and 1913, and not to be melodramatic, but we certainly are seeing heightened geopolitical risks, which could be a significant setback. But again, I don't think it's earnings. I don't think it's going to be PE ratios that slows down the bull market. I do think that we just need some certainty about who the next president is going to be and who is going to control the House and the Senate. Once we know that,
It took my brain a second to get those date references, because I was thinking about, what is that, the end of the Depression? Is that the beginning of the Fed?
What was the stock market doing in 1913?
But I think, Emily, you're referencing the beginnings of world wars.
Yes. And I'm trained as a historian, so I tend to think that way. And I think that my point really is not that we're about to go into another world war. I want to be clear about that. My point is that, we have got some major geopolitical issues out there. It's not just the war in Ukraine, but we have a war in the Middle East that could continue to widen. And I think that China is in a major jam. And I think, the volume or the extreme nature of the stimulus that China just unleashed shows that they finally recognize that they're falling into a deflation trap. And an autocracy like that, I would say that that's a heightened risk to the rest of the world. We need China to be stable.
And Emily, given that you do have, that historian history, I mean, the comparisons to 1913, 1939, of course, are pretty sobering, but just approaching it from the investing standpoint, if you even can, I mean, what is that sort of backdrop? If you extrapolate that into a portfolio, what do you do right now?
You do nothing, because actually the stock market doesn't tend to react to geopolitical events in the long term. You could get a short-term reaction. I think if instability in the Middle East, for example, were to drive the oil price over $100 a barrel, then we would see that would be, you know, increased inflationary pressures and could be a drag on the stock market. But I think as long as energy prices stay in this range, you know, you'll see reactions from the market. But for the most part, you know, again, this is not something that you should not be changing your portfolio strategy based on what you think might happen in the election or what you think might happen in the world.
It's really interesting.
It never works.
I mean, we talk about it all the time, basically. How do you hedge geopolitical events? We were talking about it in the context of oil last week, and then you take a look this morning, Brent is already back below $80 a barrel. So your point, well taken there. Let's dig into what else you said, though, about what a catalyst for this market would be. I was interested to hear you say that actually it would be getting past the election. We talk to people all the time who tell us that in the grand scheme of things, the election is just another risk event and it doesn't matter that much. To focus on what the Fed is doing, focus on what the economy is doing, and focus on corporate America. But why, in your view, is it the election that is going to be the catalyst here?
Well, the market doesn't like uncertainty. And I would say that both a Trump presidency and a Harris presidency neither one is suggesting that they might cut back the deficit spending that we've had for the last 10 years. And it's that deficit spending that has pumped up asset prices. And as long as that continues, you're likely to see, you know, this bull market continue. But I think what the market doesn't like is the idea or the possibility that we could have protracted legal battles, potentially violence. I think that's unlikely, but we saw it happen. You know, we've seen it happen, and I think it could happen again. So that kind of turmoil is not something that the markets would react positively to. And so if that possibility were to be resolved, you know, and we had a decisive election and then we moved on, I think that it's very likely that the market would rally into the end of the year, very similar to the way it did in 2016.
Emily, we've gone 7 minutes, talking to you 7 minutes without meaningfully mentioning the Fed, which surprises me. What do you expect now that we've gotten the strong jobs number for September? Obviously, you know, the data is going to be messier in October due to the hurricanes and the port strike, and the Boeing strike. Mm-hmm. But do you expect the Fed just to go 25 and 25? Does it matter the path as long as they get to somewhere near 3 by the end of next year?
Well, first of all, note to Fed haters, inflation was, in fact, transitory. So again, from a historical perspective, we saw CPI elevated for about 2 years and PCE for about 3. That was very similar to what we saw after World War II. I recognize that from the standpoint of the American consumer, 2 to 3 years feels like a long time. But from a historical perspective, again, it was transitory. So I think the Fed has done an excellent job. And one of the reasons they've done such a good job is that Chairman Powell is very adept at packaging and marketing Fed decisions in a way that investors find calming. I would expect them to cut rates twice at a quarter point each. I think this last jobs report was so positive that it's possible, and I think one of the items in that report that would give the Fed pause is the 4% wage growth. And so I think if anything, we could end up with fewer than 2 quarter point cuts, but I think that a 50 basis point cut, another 50 basis point cut is off the table.
All right, Emily, that's a good place to leave it. Really appreciate your time today. That is Emily Bowersock-Hill of Bowersock Capital Partners. Meanwhile, let's take a look at this market. Different picture than what we were looking at about 24 hours ago, because you have the S&P 500, the NASDAQ 100, currently up by about 0.4%. Of course, this comes after some pretty hefty losses yesterday, so still quite a hole to dig out of there. But you take a look at the Russell 2000, also in the green, less so though. Small caps up about 0.1%. Meanwhile, let's take a look at what's moving underneath the surface. We'll do that with Abigail Doolittle.
Well, one point of relief for investors this morning, Katie, the insurance stocks and the reinsurers. We have Travelers and Progressive, both of these insurance companies, do have exposure to Florida, and as Hurricane Milton has been downgraded to a Category 4, it seems that investors are a little bit less nervous here. These stocks down significantly yesterday, the worst day in a year, and Heritage Insurance down 2.1%, still a loss, but compared to yesterday's 23% loss, the worst day ever in this company's 10-year history, you can see that it's a little bit of relief, and this company has a lot of exposure to Florida. We'll be continuing continuing to track this story. As for one area that is down sharply, China tech, we do have big losses here. Alibaba and JD.com as an example. The Chinese government is saying that they are going to promote growth for the company, but they stopped short of new stimulus. So after a 30 to 40% rally for these stocks over the last, let's call it 2 weeks or so, this is a big cooler. We'll be taking a look at this reversal and how far it may go. And then finally, of course, JD.com, one of China's big internet e-commerce stocks. Take a look at Amazon on the first day of Prime Day, up about 0.5%. This, Matt, after falling yesterday on a rare downgrade below buy, from Wells Fargo, the company there, saying that the AWS or the cloud business, it's not enough. Well, Prime Day, we're going to get to see soon the figures and whether or not that e-commerce part is going to be picking up some of the slack there.
How many Prime Days are there? Is there a Prime Day like every month?
I think so at this point.
It just seems like it's very often Prime Day, and I used to think it was like an annual event.
Like an exclusive thing you had to act on.
Like there was a Prime Day, the way there's like a Thanksgiving Day or an Easter.
Well, soon every day will be Prime Day. It's Jeff Bezos' world.
Yeah, all right. Well, we will continue to cover any movement there in the individual names. Certainly looking at Honeywell right now, down 3%. We're going to dive into Honeywell's plans to spin off its advanced materials business. It's the latest in a string of spin-offs that we've seen. It's cyclical. It happens. Happening right now, Bridgewater's Ray Dalio speaking with Sonali Basak at the Greenwich Economic Forum. You can also watch that full conversation on the terminal. Just type live go. This is Bloomberg.
In a way in which it's nationalist, protectionist, lower regulation.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.